Good morning, traders. So how do we trade the Aussie today? So clearly the line in the sand is this previous high, and this was Friday's high. So that is Friday's high, which is the high of last week, and that is our line in the sand. So a daily close above that is going to give us scope to attack these upside targets of this this tail firstly, and then that inside tail, and then we will target that inside tail, which will coincide with a daily gap close. So this is kind of where we are at the moment. We did close above the 200 moving average, which is our purple line here, but we didn't close above the high of last week. So that's what we're looking for. We're looking for a close above 51057. So we're looking for a daily close above 51057, and that would reinforce a move to the upside. So the rest of the week we should have potential for a green candle. So if we look at this, you can see we've got a green pin bar, we've got a second green candle forming, and you can see where we bounced off, well, pretty close to where we bounced yesterday, was off the 20 moving average on the weekly. Okay, so those are our levels are in. Let's just have a look at what we have here. So what we do have is another cup and handle. Okay, so the first cup and handle was down here, and now what we have is, let's just move that out the way. Now what we have is a bigger cup and bigger handle. Okay, so we do have bullish patterns, and yesterday's bearish pattern was basically null and void, which was this M top. We did sell off a bit, but found some support and moved up. Now what I want to do is just quickly run through yesterday's play and then what we've got on for today. So first things first, what we did get was a pullback to test this breakout. Now if you were playing short for the gap close and you got burnt, there's a reason for it. The levels that get traded are always as follows. It's always the tails to the top first, it's moving averages, and then only is it a daily gap. Okay, so in other words, that was the first ambush area. This was the second ambush area. You can see all these tails here. Okay, then you would have had a 200 moving average as an ambush area, and only then would you've got to close the gap. Okay, so what you've got to do is you have to watch what happens, and often what happens in the open, and what I'll do is just drop down to 6 minutes. So what often happens is you get a green candle which indicates that the day is going to be green, and you then reverse off there, and then a lot of times people look at this and go, well, okay, we're coming down for the gap close, and normally what happens is it first targets pretty much the first tail, and then it looks for the second tail, and then it looks for the third tail, and then only does it get through down to the level. So you can see exactly what happened here. Green candle up, and then rolled off. First attempt, buyer stepped in, and then you can see second one was there, traders long. Okay, and it's off the 20 moving average as well. So always just be aware of that with daily gaps. They sort of close as a last resort, not the first resort. Okay, so what we want to do today is definitely take cognos of our closing range break. So last hour of trading on Monday, and you can see what happened is we gapped up. We used 32.8 as support, which coincide with this swing high here, so this breakout retest, and then we went on to hit the first target, second target, and even the third target. Okay, and if you look to left, you can see that was a previous high, okay, which was the weekly high. You can see that would have been a good area to take profit. We then had an attempt at it, and we broke above it quite convincingly, and we've come back to test this break. So for me, I'm looking for longs for this to continue, and I'm pretty much reckon we won't drop below this area here. So let's say from 51,057 to, let's just call it 50,000. So if we do pull back in this area, would be a good area to be long, and your stop would be below this previous fractal here of 57.70. Okay, and target levels, you can see where your breakout target is, target 1, target 2. So if you just look to the left, you'll see obviously daily gap first, and then you have a inside tail here, which will definitely be targeted, and sellers will emerge at that level as well. Okay, so those are my upside targets today. So I'll give them to you now. So first and foremost is obviously to break the high of yesterday, and we're looking at 51,450. Then what we're looking for is 51,720, and then ultimately 51,780. So those are the areas we're looking for. Best case scenario, if things really, really well today, you're looking at 52, let's just call it 52,000, or 52,040, which will be this inside tail. Okay, so that's what I'm looking for today. I'm looking for this upward move to continue, and if we do by chance break to the downside, there's still opportunities to get long, and this area here would be a very good area to be long, which would line up with a second breakout target. So first breakout target and the second breakout target, it would also close the daily gap, and that would be, with all this congestion here, would be a pretty good area to be long. But I do suspect this 20 moving average is going to hold up price probably on the 12 minutes, but definitely on the 30 minutes. Okay, so that's my take for the Aussie, is expecting this move to continue, and we are looking for longs. So I do suspect we gap up though, and we'll have to wait for the gap to materialize, and just watch for this kind of pattern to play out. If you end up with a green candle to start with above the 20 moving average, often that is an indication of a move to the upside, and often it pulls back to create a new low, and then pulls up to create a new high, and then breaks out. Okay, so you just got to watch what happens, the price action on the 6 or 5 minute time frames, and that'll give you the indication of where your entry will be. Anyway, guys, that's Aussie for me today. Hope it helps. Stay safe and enjoy the day. I'll catch you later. Cheers, man.